Japan's economy tears modest bounce from COVID jolt. International outlook darkens. Tokyo. Japan's financial system rebounded at a slower than expected pace inside the 2D sector from a COVID-induced slump, facts confirmed on Monday, highlighting uncertainty on whether or not intake will develop enough to strengthen a much-delayed, fragile restoration. A revival in Japan, like many other economies, has been hobbled with the aid of the Ukraine conflict and surging prices of commodities, even as rising intake propped up growth in April-June. Consumption and capital expenditure will continue to pressure growth in July-September. But momentum might not be that strong as growing inflation is cooling family spending, said Atsushi Takeda, leader economist at Itochu Economic Research Institute. While home demand may additionally continue to make bigger, falling exports ought to put a brake on Japan's restoration, he stated. Indeed, Japan's outlook has been clouded via a resurgence in COVID infections, slowing worldwide growth, delivery constraints and growing raw material expenditures which can be boosting families' dwelling fees. The International's third-largest financial system accelerated an annualized 2.2% in April-June, government facts showed, marking the 0.33 instantly region of growth but falling brief of median market forecasts for a 2.5% gain. It observed a revised 0.1% rise in gross home product (GDP) in January-March, when surging COVID cases harmed spending. The boom turned into driven in large part by means of a 1.1% gain in private consumption, as restaurants and lodges saw demand get better due to the lifting of pandemic-related curbs. Capital expenditure, another key driving force of April-June increase, improved 1.4% from the preceding region, exceeding a mean marketplace forecast for a 0.9% enlargement, the facts showed. But the rise in second quarter consumption became smaller than marketplace forecasts for a 1.3% boom, casting doubt on whether or not the rebound in family spending could have legs. External risks. Some analysts say a resurgence in COVID infections, and current charge hikes for an extensive variety of each-day goods, ought to discourage households from splurging on leisure and dine-outs. Wage earners' remuneration for the duration of April-June, adjusted by means of inflation, fell 0.9% from the preceding region, a deeper drop than a 0.1% fall in January-March, in a signal rising dwelling costs were already hurting family profits. Heightening fears of an international slowdown, pushed in element by using a wave of financial tightening by means of major critical banks, have additionally darkened potentialities for a sustained recovery in Japan's economy. While home demand introduced 0.5 percentage point to April-June GDP, external call for neither added to, nor shaved off from growth in a signal of waning guide from the on-strong export quarter. Looking in advance, there's downside dangers to domestic call for because of a renewed spike in COVID instances. External risks are also skewed to the disadvantage on heightening recession fears in the United States and Europe, mentioned Toru Suehiro, an economist at Daiwa Securities. Keen to cushion the monetary blow from rising residing expenses, Prime Minister Fumio Kishida on Monday instructed his ministers to draw up additional steps to slight the tempo of will increase in gasoline and meals costs. Japan has lagged other principal economies in absolutely improving from the pandemic's hit due to vulnerable consumption, blamed in component on curbs on activity that lasted until March. That has grew to become the Bank of Japan (BOJ) into an outlier within the global monetary tightening segment sweeping throughout many economies amid surging inflation. Policymakers wish pent-up call for will underpin intake until wages upward push sufficient to make up for growing residing charges. But there is uncertainty on whether or not agencies will hike salaries amid heightening risks of slowing global demand, analysts say. The BOJ has harassed its solve to maintain ultraloose monetary policy whilst inflation passed its 2% goal for 3 instantly months in June, to make certain the economic system makes a sustained healing driven by stable intake and salary increase.